You are listening to Digital Gold by Nathaniel Popper. Picture this: everything we think we know about money might be completely wrong. Throughout human history, we've relied on physical tokens, coins, bills, precious metals to represent value. But what if this entire system has become obsolete in our digital era? This question sparked one of the most revolutionary financial experiments of our time. On January 9, 2009, a mysterious figure calling themselves Satoshi Nakamoto launched something that would shake the foundations of the global economy: Bitcoin. Bitcoin represents a fundamental departure from traditional monetary systems. Unlike conventional software controlled by private companies, Bitcoin operates as open-source code that anyone can examine, modify, and improve. Think of it as the Wikipedia of currency: transparent, collaborative, and democratic. But here, where things get really interesting, there's no central bank, no government authority, no single institution controlling Bitcoin. Instead, it relies on something called the blockchain. Imagine a massive public ledger that records every transaction ever made, duplicated across thousands of computers worldwide. This distributed approach eliminates the privacy that traditional banking offers, but it provides something arguably more valuable: complete transparency and resistance to manipulation. Anyone can create multiple Bitcoin wallets with just an email address, and the system protects these transactions with military-grade encryption that even supercomputers can't break. The timing wasn't coincidental. After the 2008 financial crisis shattered trust in traditional institutions, people desperately sought alternatives to centralized banking. Bitcoin emerged as a perfect answer: a system managed collectively by its users rather than by fallible institutions. This collective management works in fascinating ways. Every 10 minutes, new transactions get bundled into blocks and added to the blockchain. The system ensures everyone maintains identical records, creating an unalterable history that prevents fraud and counterfeit money creation. System updates require majority approval from users, preventing any single entity from manipulating the protocol. While a theoretical 51% attack could compromise the network, the attacker still couldn't steal others' Bitcoins. They could only reverse their own transactions and block new ones. Bitcoin's first killer application emerged from an unlikely source: the dark web marketplace Silk Road. Hidden in the internet's shadows, this platform allowed anonymous drug transactions using Bitcoin as payment. Sellers appreciated Bitcoin's irreversible transactions, while buyers valued the anonymity. This underground economy became Bitcoin's proving ground. When Silk Road launched in February 2011, Bitcoins cost about $1 each. By May, they'd reached $10. When a senator publicly condemned Bitcoin as money laundering, its price shot to $30 within days. Silk Road demonstrated something powerful: a completely self-regulating marketplace operating beyond government control. By March 2012, it hosted 10,000 users spending $35,000 daily, with security experts teaching Bitcoin safety and medical professionals advising on drug use. Even when authorities shut down Silk Road in 2013, Bitcoin had proven its resilience. The cryptocurrency had reached $140 per coin, establishing itself as more than just a tool for illicit transactions. The appeal extended to political movements fighting government overreach. When the U.S. government pressured payment processors to cut off WikiLeaks funding, eliminating 95% of its donations, Bitcoin advocates saw a powerful use case for decentralized currency. The Occupy Wall Street movement embraced Bitcoin as a way to receive donations that no authority could freeze. These protesters, camping in Manhattan's Zuccotti Park, viewed Bitcoin as protection against both government interference and stock market volatility. Bitcoin's value became especially clear in countries with unstable currencies. In Argentina, plagued by inflation and currency controls, Bitcoin offered an escape from government monetary mismanagement. While credit card transactions took 2 weeks and heavy fees, Bitcoin transfers completed in 2 days with better exchange rates. Argentinians, scarred by repeated currency devaluations, saw Bitcoin as a stable store of value. Even though they couldn't spend Bitcoins directly in local stores, they trusted this digital currency more than their own peso. Their instincts proved correct. While the peso fell 25% against the dollar, Bitcoin surged 860%. Bitcoin's advantages extend beyond escaping government control. It solves problems that traditional banking systems have ignored for decades. While we can stream high-definition video instantly across the globe, bank transfers still take days to complete. The absurdity reached peak during the 2008 crisis, when J.P. Morgan Chase needed emergency funds from a Japanese bank over a weekend. Because electronic transfers weren't available, they literally mailed a $9 billion check to prevent collapse. Bitcoin would have completed this transaction in milliseconds. The digital nature enables entirely new economic models. Bitcoin can be divided into tiny fractions, allowing micropayments like 1 cent to read an article or 2 cents to skip an advertisement. Traditional payment systems can't handle such small transactions economically. Beyond payments, Bitcoin's blockchain technology has revolutionary implications. Its verification system could replace traditional legal frameworks requiring witnesses or notaries. Smart contracts, property records, and identity verification could all operate on blockchain systems, creating trust without centralized authorities. The most exciting applications haven't even been invented yet. Just as the Internet's creators couldn't have imagined social media or streaming video, Bitcoin's ultimate impact remains unknown. We're witnessing the birth of programmable money, currency that can execute complex instructions automatically. Bitcoin represents more than a new payment method. It's a fundamental reimagining of how societies can organize economic activity. By removing the need for trusted intermediaries, it creates possibilities we're only beginning to understand. This digital revolution challenges every assumption about money, banking, and economic organization. The question isn't whether cryptocurrency will change our world. It already has. The question is how far this transformation will go. Found these insights valuable? Hit like and subscribe for book summaries that could transform your thinking. The purchase link for digital gold is waiting in the description, and we're curious, which of these concepts resonated most with you? Drop a comment below.